Hello fellow traders, my name is Jake here at StratGeeks. We have another educational video for you today about ORS Fusion, our primary automated strategy for trading the futures markets. Without further ado, let's get going on that video.
Okay, how's it going everybody? Let's get started on this video. We're going to be talking about the Ryan Jones fixed ratio scaling method today. And without further ado, let's go ahead and get started. Let's get right into it. We are going to be using the NASDAQ, and specifically the Micro's NASDAQ. Let's drag this down here so you can see a little bit better. There we go. And we got our Ryan Jones over here. This spreadsheet is available. Let me know if anybody wants it. Send me a DM on Discord and we'll get that to you. Specifically designed to trade the Ryan Jones method. So let's take a look here at our strategy. ORS Fusion. We are loaded up right now with the Jake's SR MNQ 3-minute micros template. And that position size is 6. The only change to the template is that we're only using one. So we're using the small opening range template, but we're extending it all the way up to 300 ticks. That's it. So we only have to use one template to design this Ryan Jones scaling spreadsheet backtest. So let's go ahead and see what our 6 contract drawdown and profit would be. 90 days. And I'd just like to reiterate once again, I've said this in other videos, our backtesting with ORS Fusion is really, really good. We're using only limit orders, so there's way less possibility of errors in the backtest than using a market order strategy. The price has to pull back to our limit order, hit the fill the limit order, and then reverse. Or in the case of some fusion trades, actually go to target. Either way, it's got to go to target. And the target is also a fixed order. We don't just get out with a market order, if you will. There has yet to be, maybe there was one because of like a fill of only half a contract. But so far as I can remember, there have been no days that did not match the live results. So after you finish a trading day, you know what your results were for all of your trades, wins and losses. Then we go back and we look at that exact day after the trading is done in backtest mode, and they match up every single time. So when it comes to a 90-day backtest, I'm going to go ahead and say that they match up. It matches up quite well. So that said, let's go ahead and look at the strategy performance results for 90 days with the template, which is with 6 micros and optimized to the best of my ability for an Apex 50K account. But right now we're talking about cash accounts or a PA account, an Apex PA account that has a pad that you might want to actually consider scaling. So let's go into strategies and let's see what that drawdown is. Let's make it 6 because that's what the template is. 6 here, not max position size, position size. And okay. Now the purpose of this video is not to go over the strategy and the settings and all that stuff. The purpose of this video is for fixed ratio trading for money management. Okay, so if we go right click in strategy performance, real time historical, we can see, yeah, 14 grand profit with 6 micros over 90 days, max drawdown of 1400. Ryan Jones would say, take that 1400 and half it. That's going to be your fixed ratio. So this is what I did. Went over here and I said, okay, cool. Our fixed ratio / delta is 700. But here's the next thing that I did. Next thing I did is I said, well, I don't even want to start with 6 micros. If I have a $2,500 cash account, so a relatively small trading account, I don't want to start with 6 micros, but I'll keep that fixed ratio at 700. I don't want to be too aggressive with this. I want to slowly scale it and build it according to the spreadsheet and the Ryan Jones method, but I want to build it slowly, as conservatively, if you will. So, but I also don't want to start with 1 micro. That's super lame. So 2 micros. We're going to start with 2 micros. So let's go in, and for the purposes of the spreadsheet, we need to get the data. We need to get the ticks made per day from the backtest and input those ticks per day over here in this ticks column of the spreadsheet. We know that the micro contract for the NASDAQ is worth 50 cents. A mini is worth $5. A micro contract is worth 50 cents. So we basically need to run this backtest again over here with 1 contract, so we can get the baseline amount of ticks made per day from ORS Fusion for the last 90 days. So we'll come in here to position size. We'll make this 1 contract, 1 micro. Okay. And that's going to calculate. So here are the different days. I think we got like 40, 50 days or something that we're going to load in out of the 90 calendar days, which is definitely enough sample size. We had like 200 something. Well, let's just see here. How many trades did we get? We have a total trade sample size. That's great. 266 trade sample size. So with 1 micro in 90 days, we had a $2,300 profit or so and a $235 drawdown. But I'm not going to use a fixed ratio of half of 235. That would be insane. No. So I have a pretty extensive experience with the Ryan Jones method, and I like the starting with 6 micros with the template, having that, and with 1400, having that to 700. Fixed ratio of 700 is pretty good. We can also, once we get all of our data, our ticks made per day data in this column, we can play around with this fixed ratio number and see what feels good, because you're going to have to take some drawdowns. You're going to have to also hold some trades and some days and make some good profits. So you want it to be reasonable for your psyche. So here we do have 1 micro. So we're going to come into the strategy performance, and we're going to switch to analysis. Here, this is 1 micro. Here's our equity curve, so quite beautiful. But we know that this is ORS Fusion. It's a great algorithmic trading platform, trading software. It's a fantastic edge. But we don't want currency here. We want ticks. We need to upload this. We need to get these data transferred over into the spreadsheet. So we can come right-click and go to Properties, switch currency to ticks, click OK. And everything's going to convert to ticks. So we are looking for the net profit column. So we can see here, let's make sure this is all organized by day. Yeah, 4/4 is going to be the first day. So if we wanted to, I'm not going to bore you all with this, 4/24, and then we could say 4/9/24 is the next day, and so on and so on and so on. So what we need to do is we need to transfer this ticks. These are ticks made per day or lost per day. So we have 363 ticks made here, 241 lost the next day, et cetera, et cetera, et cetera. So let's go ahead and input everything, and I might go ahead and fast forward this part of the video, but we'll just do it right now. I'm gonna actually get rid of the fixed ratio for now. I'm just gonna make that a giant number so we can see what a cool difference it makes. All right, so let's see, 45. So okay, so there we have it. So this column over here, get that a little bit smaller so we can see it all. This is with 2 micros contracts. So this would be with 1 micro. And that adds up to around the 2,000, 2,200, whatever it was. So that looks good. And then this would be with 2 micros. So if we just traded 2 micros contracts the whole way through this whole 90 days, we would end up with a 4,600, and that closely approximates what we had here, right? Yeah, so 2,300, 2,300, perfect. And we can also double check here this way. Let's go ahead and load 2. And this should equal about 4,600. Calculate. And I also want to show you how the ticks per day are organized. Collected, I should say. 4,600, 4,600. Yep, great. Freaking perfect. Okay, so let's go back to 1 micro. And you can see the commissions are included. So back to 1 micro. And our first day here, this is our first day, April 4th, at 115 ticks profit. Okay, well, I had pre-measured all these. So there's a win, there's a win, there's a win, there's a loss. So we'll come in, we'll bring our calculator here, and we'll do 65. We're counting the numbers on the flags here. 65 plus 65 plus 65 equals 195 minus 80. So there's 115. And each day is calculated just like that. This is a loss day. This is a win day. This is a loss day. This is a loss day. There's a win, etc., etc., etc. All right. So just making sure that's still working. Now we can see here on our graph, we got up to that about 4,500 mark. Oh, what's happening on our graph here is that it's taking a couple extra trades because we only got to, oh no, we need to select our data series. How many do we have here? 4657. Select data. 57. There we go. Perfect. Okay, so we said our fixed ratio was going to hear drum roll. Our fixed ratio was 700. So let's do. Remember, we're starting with 2 contracts on our first day, and we had 700. Enter. Well, hot diddly darn, that's pretty freaking awesome, and that's actually kind of conservative too. 700. So we can see here we had 2 until we made $700, which was here. So this is the first day, second day, third day, fourth day, fifth day. So on the 4th day, we made our 700 over our 700. So the very next day, we know that we're allowed to scale up, and we're allowed to trade with 3 micros. And we do that for 1, 2, 3, 4, 5 days. Now we're allowed to scale up to 4 micros on the next day, and so on and so on and so on. Now, if we were to lose half of this, so we scale up every 700, that's our delta. We scale down every 350 as our delta. So let's see if we can find a spot where we scale down here. So we lost the 350 here, and then we know, so we know that the next day we trade with 5. But then we made some, now we're trade with 6, 9, 11, 8, 9, and so on and so on and so on. Now, if you want, you could cap this and say, well, I never want to go higher than 10 micros, no matter what. Well, then you could just simply do 10, 10, 10, 10, oops, do that. 10, 10, 10, 10, 10, all the way down. But then you'd have to scale down by hand as well. But that is an option. Another cool thing that can be done. Oh, we'll say 700 actually still felt too aggressive. Like, wow, that's a little nuts. I don't like this $2,000 loss day here. That might be a little scary. Or this $3,500 win day. That's like a little much, maybe. I don't know. Well, let's make this 1,000. Let's make that a fixed ratio of 1,000. So now we have to make $1,000 before we're allowed to scale up. but we can see this was only 4,000 or so profit. It was like 4,600, and now with a fixed ratio of 1,000, we've made a couple extra $1,000. And what if we wanted to take some money out of our cash account? Say we wanted to take out $1,000, maybe where would be a good spot? I don't know, halfway through, something like right here. Maybe you want to take $1,000 off out of the account. So you would just take, you would just do minus, let's see how close I can get it, 500 ticks. Let's try minus 600. Minus 620. All right, so minus 675. 670 minus 670. That gets us right to about $1,000. So you could color, and I've done this before, you could color this something else, and you would know with the color coding system that this was a withdrawal. And then you'll know the next day that you can only trade with 3 micros. Okay, so minus 500. So you can see wherever you take it out, yeah, you basically just have to do the math and know what level you're allowed to trade at once you've taken that money out. I hope that makes sense. Maybe I can find another example. So let's say this was a withdrawal here. So we were going to trade with 6 the next day, but we just made a withdrawal of 6. What was it, 620? Oh, that's why, because I was on the wrong side. Minus 320. Yeah, so we made a withdrawal of $1,000. Here we go. I think I screwed it up before. $1,000 withdrawal, we'll say $967 we took out of the account. And that means that the next day, we're not trading with 6 contracts, we're trading with 5 because we have $1,000 less pad in there. And that's with the $700 delta. With 1,000, everything's going to be different with 1,000. So let's get back to where that was here. And you can play around with other stuff like, what if we did a $400 delta? Well, then we're looking at being at, so every $400 per day. It's not per trade. You can do it also per trade. It gets a lot more, you got to really be hands-on in the middle of the day, switching the strategy and how many contracts per trade and turning it on and off and everything. But this is per day. So for every $400 made per day, and some days you might make more than 400, obviously. So you're going to scale up multiple levels for the next day. But you can see here, you know, this might be a little much for somebody to handle. With the $400, you're gonna have a loss day here of $5,300. You're gonna go from 11,800 on the next day to 6,400. But you're gonna go, you know, if that was 30 micros you were supposed to be trading that day, and then you're gonna be down to 17. But you know, it does recover. 91. I mean, it's getting a little intense there. At a certain point down in here, you might want to consider switching over to minis. Then you'd have to have a new spreadsheet, obviously. But this is a general idea, folks. Oh, nice. All right, cool. Kept it under 20 minutes. Well, let's get back to that $700 delta. That seems reasonable to me. You don't have any, I mean, that might be even a little much. Let's do 750. $1,600 max loss day. That's not bad. And then you only get up to 17 contracts. That's pretty cool. Another thing that you can do is just for fun, we can come in and let's choose a section where there is like a couple of losses, some losses. Here's a loss, a win, a loss, and then like a couple small wins and a couple small losses. Let's take that section, copy it, and just paste it down here a few times. And just kind of mix it up a little bit. I'm gonna paste it here. But we can see if we're getting these kind of basic numbers, and we can say that they're going to be about within that because of how the ORS Fusion strategy operates based on the opening range. Please, if you want to understand how the strategy actually takes its trades and everything, go watch. I have a whole hour video, at least 1 or 2 hour videos explaining how ORS takes its trades. But that's, you can see, let's see if I have this set up correctly. No. But if we wanted to, we could take this whole section, I don't know, just randomly. Take another random section. But this is how it can scale. So this would be, I don't know, like a hypothetical, definitely a hypothetical. A hypothetical, what, 40 was 90 days, so that means 80 would be 120 days. So it's like half a year scaling a cash account. 6 months. And this is all with micros, man. Like, this isn't even really that. But that's the difference. Look at the difference. So if we make this huge again, then we won't have a fixed ratio. So we can see with this hypothetical, we would be at $7,000 or so, but with a $750 delta, we're at $4,500. So pretty crazy stuff here, folks. Obviously, you know, all this stuff under here is all hypothetical. Of course, past results are not necessarily indicative of future results, but we can say that we have tested and traded live this ORS Fusion for quite some time now. And like I was saying at the beginning of this video, the strategy back-tested results match almost perfectly with all of the live days. So, Jake from StratGeeks, hope that video made sense for you folks. Ryan Jones, scaling method. Jake, signing out.